Welcome to my channel Tip Guruji. So, impact of war on gold prices in India. Throughout history, wars have not only changed borders and politics, but they have also shaken the global economy. One of the first financial markets to react during conflict is the gold market. In countries like India, where gold holds cultural, economic, and emotional value, even distant wars can significantly affect its price. But why does gold become more expensive during wars? We must understand that. And how do international conflicts influence the gold market in India? To understand this, we must explore how global uncertainty affects investors, currencies, and supply chains. Gold, the safe haven asset. When war breaks out anywhere in the world, financial markets often become unstable. Stock markets may fall, currencies fluctuate, and investors begin to fear economic losses. During such uncertain times, people look for assets that can protect their wealth. One of the most trusted assets for centuries has been gold. Unlike paper currency, gold has intrinsic value and is recognized globally. Because of this, investors around the world shift their money from risky investments into gold. This sudden increase in demand pushes the price of gold higher. As global demand rises, the gold market in India also experiences price increases. In fact, during major global conflicts such as the Russia-Ukraine war, gold prices around the world saw noticeable increases as investors rushed towards safer assets. Global uncertainty and inflation. Wars often disrupt global trade and economic stability. When countries are involved in conflict, transportation routes may be blocked. Production may slow down and energy prices can rise drastically. For example, wars often affect oil supplies, which increases fuel costs worldwide. Higher fuel prices make transportation and manufacturing more expensive. As a result, the overall cost of goods rises, creating inflation. Gold is traditionally considered a hedge against inflation. This means that when inflation increases, many investors buy gold to protect the value of their own money. Because of this behavior, wars indirectly push gold prices higher in countries like India, where gold demand is already strong due to cultural and investment reasons. Currency fluctuations and the Indian rupee, another major factor affecting gold prices in India during war, is currency value. Gold is traded internationally in US dollars. When global conflicts occur, currencies in developing economic sometimes weaken due to economic uncertainty. If the Indian rupee weakens against the US dollar, the cost of importing gold becomes more expensive for India. This means that even if the global price of gold remains stable, Indian consumers may still see higher gold prices in the local market. Since India imports most of its gold from other countries, fluctuations in currency exchange rates can have a strong impact on gold prices within the country. Supply chain disruption. Wars can also interrupt global supply chains. Trade routes may become unsafe, international sanctions may be imposed, and in shipping costs may increase. These disruptions can slow down the transportation of gold and other commodities across the world. If supply becomes limited, though, while demand remains high, prices naturally rise. In such situations, the gold market becomes more volatile and price fluctuations become more frequent. Impact on Indian investors and consumers. For Indian investors, rising gold prices can have both positive and negative effects. Those who already own gold may benefit from increasing prices as the value of their investment rises. The monetary value rises, the currency value rises. However, higher price make it more difficult for consumers to purchase gold jewelry, which is especially important during festivals and weddings in India. Because of its cultural importance, gold demand in India often remains strong even when prices increases. So overall, after watching all these scenarios, after watching all the facts, wars influenced gold prices in India through several powerful factors. Global uncertainty, rising inflation, currency fluctuation, and disruptions in supply chains. As long as geopolitical conflicts continue to create economic instability, gold will likely remain one of the world's most trusted safe haven investment. While wars and crises can make gold prices jump, history shows that in the long run, gold remains a strong and stable investment. If you look beyond short-term swings, buying gold today can be a smart way to secure your future. So buy wisely, buy smartly. Like and subscribe my channel for more videos.